Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst. Jumping into the charts on this September 16th. So ending off the week, I just want to say congratulations on our trades. It was fairly a very good week for us, being the fact that our accounts finished at new all-time highs once again. We closed 7 winning swing trades, 6 winning day trades, and 2 losing day trades. So overall, well done. Great batting average. 86, just over 86% there for this week. Nonetheless, though, what happened and what transpired today was the fact that the S&P 500 here, along with many other sectors, now confirmed the technical breakdown. Okay, so what's the importance of now confirming the technical breakdown? Well, the importance, since we've closed and made a new low here, is it has now opened up the probabilities substantially to at least test our gap fill zone here around 365 and change, and at the minimum our double bottom. So I am now in the camp, based off of probabilities and technical signals, we're going to test this 362 in the near term. Now, we have had a substantial move down from 411 on the index all the way to 382. So you do have a potential little bit of support and buying pressure here that could at least take this back up to the gap fill up here before rolling over. This trend line is going to be major resistance now. The fact that we closed below it yesterday and now confirmed shows that this downside pattern is very likely to keep going down. Now, we do have a couple support levels. I am very upset, not really upset, but concerned that this gap fill was just missed by pennies. You can see that that wick did not touch the gap fill, the technical gap fill. So you've left this gap fill open and you've left this gap fill open. Now, being the fact that you've come close, so close to that gap, this level is not going to be as strong as it once was, and as well as this level is not going to be as strong as it once was. So it's really going to matter on what the price action does on Monday. Is it going to have a little bit of a bounce based off of the buying pressure here and a little bit of a slight reversal end of day? It does show that potentially there is buying pressure, but don't get this wrong. The spiders, the S&P did finish down on the day. And the interesting thing about the indices finishing negative on the day, if we look at the DXY, the US dollar, on a day where the US dollar has arguably put in a little bit of a short-term reversal signal of its own, not a reversal signal that negates this power bull flag pattern that is potentially playing, but just in the short term, you know, for maybe 1 to 3 days, the dollar is not going to potentially take out this wick. So the markets generally like signals like that, and it did finish basically down slightly, almost flat, but it did finish technically down, and the markets could not get that rally on a dollar softening. And as well as the short end yields were also softening today, putting in potential short-term tops. So if we look at the 2-year yield, you can see the 2-year yield is at 1, 2, 3, 4, 5, 6 day, and it made a new high, but it was not able to hold those highs, and you've now closed with inside of this previous high wick. So nonetheless, for yields, I think it's going to be very difficult for yields to continue to climb in this parabolic ascent without some sort of a pullback to this 3.75 at the minimum, and then it could potentially make its next stint higher. But what transpired and why the markets were so weak today and under pressure, if we simply look at the transports, FedEx came out with some news, and this is the Dow. So FedEx came out with some news. They revised down their profit and guidance, and that collapsed their stock down over 21%. And that is truly an epic sentiment indicator. Transports are the leading indicator for the economy. This is the Dow Jones Transport. It was down 5%. Look at this gap down. Boom. Massive gap down. Continued to bleed lower. You did finish off the highs, closing back within this wick, but you still technically basically broke this support line and damaged it significantly by making a new low on the charts. Basically making a new low all the way going back here was the last time was in February of 2021. So that is an astonishing amount of time that has now passed where we actually made a new low. And the key thing about this is we actually telegraphed this when the Dow was rallying with the summer doldrum. We said, what type of pullback off resistance will this be? So when it was hitting resistance, we didn't know if we were going to get a sharp pullback. We clearly did get a sharp pullback, a little bit of a retrace back to the resistance, and then an even sharper pullback. which followed by a little bit of a technical bounce with an even sharper drop and gap down. So the price action is disgustingly weak to the downside, which is why we have been positioning ourselves net short, playing the technical bounces though, so that we don't get crushed on just being short in this market. So, because that can happen despite a trend that is down. If you get spooked out of your shorts at the wrong time, you could potentially get squeezed and definitely lose on those trades. So it's very, very key to pick your shorts carefully and pick your longs also very carefully in this market, because this market is trending lower. And if we just look at the FedEx chart, why this is so important, this type, and we were short FedEx up here. I remember we covered it down here, so had I known it was going to drop that fast, that quickly, I would have stayed in the trade nonetheless. But nevertheless, FedEx is so important because it shows where consumer spending is, most likely the online purchases, which is dominated in the big cap sector. So the online e-commerce platforms and businesses that rely on the sales, where they require to shipments and delivery to people's personal houses, that is obviously expecting to wane significantly by FedEx for them to revise down their guidance so negatively and their forward guidance. So that being said, due to the fact that the consumer spending and consumer sentiment is now weakening, just due to the fact we've had now Costco put in a topping formation pattern, which we can just look at the Costco chart over here. We've had Costco put in, triggered this head and shoulders. We are short Costco. You might get a little bit of a retrace back to this neckline or inside of this little parallel channel, but this pattern is technically triggered to the downside, which should send you much lower. So the importance of these types of stocks, Costco, FedEx, it's really showing where consumer spending is going, and it looks like it's starting to wane, or at least these companies are expecting it to wane. And one might call this a bottoming tail reversal signal, but I don't. Being the fact that you've dropped 21.4%, this is not any type of reversal. Sure, you're way off the lows, which is a great trade, but you're nowhere near. I think you may have a little bit of a retrace up, but I think the technical damage is clear now, and I do think that this stock heads low over time. I'm looking at this interesting trend line over here, this parallel channel. So connect your pivot to your pivot, to your pivot high, to your breakout impulse move. I think we're going to retrace all the way back down to this top of this channel before we get a meaningful technical bounce. And there is a massive, massive gap on the charts right over here, which I would imagine has to get technically filled at some point in time. So if we simply just draw a parallel line there, let's just see where these two may intersect. So you can see that this gap fill plus this downsloping parallel channel intersects relatively soon. So we could find FedEx gapping a little bit more down based off of even a weaker market. And that is truly going to be something to watch. But the leading indicators for the economy are transports, and if they continue to wane, which clearly they are, expect the markets to head much, much lower. Let's take a look at natural gas. Congratulations on our natural gas trade today. We banked over 19% in 2 days. That's how we do it. In or out, 2 days, basically no short fees, all profit, 19% in our pocket. Thank you very much. 2 massive down days. You are at support, the neckline. You technically, now a lot of people, I did say I was watching this head and shoulders formation, and I don't like this as a right shoulder. Like I don't like to be biased in the sense of searching for downside or upside patterns. I like to technically analyze it from a bias, and this is a sloppy shoulder. You would have liked to see the shoulder round out for a couple more days so that it was more balanced. This up move was more so balanced with the down move, but some may call this a right shoulder, and yes, maybe you can get away with it, but I do not like it as a right shoulder. I think natural gas does have a potential to maybe bounce up. If we get a 50% retrace, I may consider starting to look for a short if we start curling over again and forming a little bit more of a better right shoulder, a hardy right shoulder. But nonetheless, if you are calling this a head and shoulders formation, technically you have closed below, so Monday is confirmation day. If you trigger this neckline, then you do have a little bit of a downside move all the way down here. But again, for me personally, now that we're out of the trade, banked our money, I don't like this as a head and shoulders anymore, just due to how immature this right shoulder is. Let's take a look at oil WTI. If we flip to the daily chart, Oil just basically holding a little bit of a bounce. It's still too early to tell if this is going to be bear flag or if we're going to get a little bit of a move up to test the top of this range. I would imagine we should try to test the top of this range. I would really feel comfortable potentially shorting oil if we did somehow retrace to the top of this parallel range. You can clearly see it's a beautiful channel that oil has been trading down, and I do think eventually we're going to break out of it. I just think that break will most likely come to the upside at some point. But until then, I do think we have to hit the 73, have a big technical bounce off of there, maybe a rally back to the 200-day moving average before rolling over and starting another leg as the economy progresses in a negative downtrend. Let's take a look at, another one is Adobe. So we swing traded Adobe in the day trade room, so congrats. I think we basically traded it 3 times, won all 3 times today. So Adobe's been crushed lately, and this is a household name. But you can see we also picked it up today as a swing. Day trading, is very fast paced. In the afternoon, I get to calculate out some levels, and if it makes sense as a swing, based off of a couple of the factors that we use, especially the risk to reward setup for a swing. Obviously for swings, we're looking for more gain and upside. So that's why we need to really be careful with where we pick our levels versus day trades. We're looking to scalp a little bit, but nonetheless, we won our day trades. You can see we clearly had a rinse and repeat scenario where we had our initial buy-in, a secondary buy-in, a third buy-in if need be. And then we were just selling at the top of this red line. We did it a couple times up here, up here, up here. And then we actually picked it up here for a swing. And I just saw accumulation all throughout the day occurring. There was a lot of traders in here, which is why the price action was so choppy. But the overall consensus for this was that there were buyers stepping up at these levels, starting to accumulate Adobe. So that was super healthy to see. If we flip to the daily chart, you can see why we've picked up Adobe. So Adobe, let me just flip to the auto here. Adobe's had this massive move down. You can see this is where we are. And that, again, it was slightly miss on earnings about yesterday, but not terrible, so to speak. So Adobe has had, I think, down over 26% in as little as a few days. And now it looks to be that you're putting in some buying pressure. So it'll be interesting to see. I do think at the minimum we can go back up to this 308 and fill this gap. And even that would be a tidy little profit for us if we so choose to sell it at that level. So that's the big thing. But if we flip to a weekly chart and why we started accumulating at these levels, the weekly chart really depicts this very, very well. So the reason we chose this weekly chart is we found this trend line going all the way back to 2000 major pivot. Let's go over here. Then you had your wick lows over here, a wick, boom, in basically 2018. And then look what you hit today, boom. So you had that one factor as a trend line. Then you also had these major pivots over here where you had a pivot, a little bit of a fake out, breakout, which failed, went back lower, came back up, broke out, boom, checked back to this retrace zone, and then you started powering up. So massive level of support. You do have another level of support at 278. So this is a fair enough accumulation zone for my criteria of a swing trade. And I do think even if we drop a parallel channel down, we now have a pretty decent area, if you drop that, where you have these multiple levels of support connecting with where we are. And I do think that this can have a mean reversion back up to 339. Adobe is still a quality company, very tied in with the government contracts, and whenever you have government flows that force you to use, certain packages to download documents and a variety of legal matters, Adobe is a pretty solid company. This is a fantastic discount. We're buying just accumulate Adobe at almost at the COVID lows here. So that's a powerful move into support. We have to take that opportunity. If you calculate the measured move from this high over here to this low over here, and you drop the bear flag down, this is pretty much the calculated move right into support, the downside. So I do think that we're in a great level to start accumulating and potentially offload this trade sooner rather than later. So overall, I think it's important to also touch base on gold. Gold did have a good reversal day today, basically making a new low and then getting bought back up. The miners like Newmont, Pan American Silver were on a tear. So gold still has a lot of work to do before we can really say anything. But if we look at silver, silver is having a beautiful bullish consolidation. I love this pattern. This is going to play out with our thesis that silver is the next explosive asset that's going to lead the second leg of the bull market. And if anyone knows anything about the second leg in the bull market, it is led by silver. Gold follows silver. Gold has the extra, or silver has the extra alpha. And if you look at why silver should be moving at this time, if we simply look at like the ICLN, the clean energy ETF, it's one of the industries that is still in a bull market, trading near the highs, right? Like breaking out of this downsloping channel. You have stocks like ENPH, Enphase, who have broken out, trading at massive levels. Sorry about all the messy lines. You also have FSLR breaking out at new levels. So you have massive upside that has occurred in these solar companies, which require an exorbitant amount of silver to make their panels and ensure their panels are working. So nonetheless, if these companies have seen so much money flow, in order for them to fulfill their market cap and size, they have to deploy all that capital and put it to work via investing in precious metals like silver, so that they can make and buy their solar panels. So nonetheless, silver is an interesting, very interesting play. Let's just take a look at the US 10-year yield, and then we'll touch base on Bitcoin quickly. So the 10-year yield is still testing that double top zone. You can see it actually hit it here perfectly. So if you wanted to add to your bond play, this is the time to do it at this double top zone. Maybe on Monday, Tuesday, we may get a little bit of a freak out where you actually pierce this level. I think that's a high probability of happening, just due to the buildup that typically the anticipation that the Fed meeting brings and the next interest rate hike. So there could be a little bit of a pierce opportunity to add to your bond plays early in the week. Let's take a look at BTC USD, shall we? So Bitcoin chart, I'm not liking this chart due to the fact that we've retraced back to the breakdown zone. You hit resistance, tremendously powerful resistance, also hugging this 19.7 level, which is the 2017 all-time high. If we flip to the weekly chart is pretty nasty because you are forming a bear flag inside of a mini bear flag. So, and you're at this previous pivot. If you lose this pivot, basically it's going to be a sharp move down to the 11.8 to 13 zone. So that's going to be our next big level, around the 11.8 level or 12,000 level, and Bitcoin could see that pretty sharply, which would be a tremendous move down, which I do think is coming very soon, just due to the fact that this pattern has confirmed on a weekly basis below the 200, classifying it in a weekly bear market. If you look at where Bitcoin was, if Bitcoin was ever in a weekly bear market, it's never been in a weekly bear market. So coming back here when the 200-day weekly moving average started, Bitcoin has never confirmed below the 200 weekly moving average, thus emphasizing the difference of economic policy periods that started in the early 2009 era, 2010, zero interest rate policies, QE, and all these repo sites, but it never ever confirmed below the 200 weekly moving average since QE was in effect and low interest rates. But now that QT and high interest rates is in effect, you're now starting to confirm below the 200. So this clearly demonstrates and dictates that Bitcoin has a lot more downside just due to the overall economic environment in which we are entering soon and right now. So let's stay tuned with Bitcoin. There is going to be a massive bounce levels that we are willing to play, and certainly we will be ready to seize those opportunities if the charts call for a good trade setup. So nonetheless, thank you all for being members. Please give this video a big like down below. There's a ton of things to analyze and continue moving forward in the markets, because things are certainly going to be spicing up as this next interest rate hike, most likely of 0.75% on the 21st of September, that is going to, based off his comments, Powell's comments, is going to set the tone for the expectations in the, I don't think there's a meeting in October, I think the November meeting. So it's going to truly set the expectations for the next FOMC meeting after the September one. And that is going to really dictate where the markets head in a shorter time frame. If he's very hawkish, the markets are going to have a sharper move down faster. If he's somewhat less hawkish, the markets could be consolidating longer and floundering, chopping around this range, and then eventually head lower over time. But it's really going to make a pivotal difference for where the next 5 to 10% in the markets comes. Is it going to be in this choppy fashion to the upside, or is it going to be a straight shot down to the downside? So time will tell, and I just definitely think based off of where yields are in the S&P and the dollar, I still think that likely move is to the downside. So flipping back to the SPY, if we take a look at the weekly chart on the SPY, you are starting to trigger this bearish pattern. The next level I do think is the big level is this 349. Obviously this double bottom zone will be some support, but don't be surprised if we slice through that level faster than most anticipate. That's the key difference, is that QT wasn't even started here. QT is now in effect over here with higher rates, with the weakening economy globally. So there's tons of headwinds that have made the conditions a lot worse, even though we're higher on the chart right now in comparison to where we were here. So let's stay tuned for more price action. Let's be vigilant. Let's be try to hold a neutral bias when we analyze the price action in stocks. But this type of bias and price action is definitely trending lower into the bear market. So take care, everybody. Enjoy your weekend, and we will see you on the charts on Monday.